Trade and industry have been one of the most affected sectors when it comes to the COVID-19 pandemic. And one of the continents said to be most hit is the African continent. Welcome to this CNBC Africa special panel session. And with me, I have a group of experts that are going to break down for us the impact that COVID-19 is said to have on trade, industry, and various sectors across Africa. But also we'll look at the silver lining. What are the investment opportunities and across the continent? With us on the panel today is Ms. Asiimwe. She is the CTO of Trademark East Africa. She is there in Kampala, Uganda. We also have Eric Olander, the managing editor of the China Africa project, and Mr. Gerald Mukyenga, who is the group CEO of MULTILINES International, also based in Kampala, Uganda. I want to start with Mr. Gerald Mukyenga there. What kind of impact, as a person who heads a logistics hub, what kind of impact has COVID-19 actually had on the sector?
Thank you, Arnold. We all know that when China sneezes, then the rest of them cough in the world. So in the logistics industry in East Africa, the moment COVID was announced in December, January, the whole sector, the logistics sector, started feeling the pinch. First of all, the orders started reducing. Most of the importers that were importing for Uganda, for Kenya, for Tanzania, and the rest, importing raw materials for the local sector or the finished products, since we are import-oriented, started reducing. And so we've lost revenues, we've lost a number of TEUs, container loads, and also on the air freight side, the passenger aircrafts were reduced. And as we know, most governments took quick decisions to protect the population and put protective measures, barring aircrafts running to their countries. And so, in short, we've had a very big impact in terms of loss of business, loss of revenues, and the multiplier effect to the general public and the standard of living.
I want to bring Alan into the conversation as someone who's working with stakeholders such as the governments in ensuring that supply chains are not affected in this kind of time. You look at what Gerald has talked about, what Mr. Mukyenga has talked about in terms of the effects that this has had on the industry there. How have the people that you deal with on a daily also experienced similar effects?
Thank you very much, Krizera. Definitely, the region has been terribly hit. We've seen supply chains being disrupted. We've seen demand, because even for people to supply, there has to be demand. We've seen demand really seriously affected, with people going to the villages, leaving the towns, not even just demanding, hunkering down. So the sectors are severely affected. Key sectors like horticulture, key sectors like floriculture. No one is buying flowers, I must say, yet we need to be supporting our own people. So we've seen serious effects of COVID. To put context, on the 10th of March, I was at Busia at the border between Uganda and Kenya, and it was bustling. It was a hive of activity. There was a lot of business going on. If you just look at the fish business, dried fish business, which was prevalent in Busia, they were dealing in 25 million Kenya shillings every 2 weeks. That is a lot of money for that economy. And all that has been seriously disrupted because they got their fish from Lake Turkana, they got their fish from Lake Victoria, they got their fish from Lake Choga in Uganda, and they were supplying DRC and the whole region. None of that is happening now. Have been affected. So COVID has really affected supply chains.
I think, Alan there. Eric, I want to bring you into the conversation and Eric, China has been a great source for things like capital goods that are supposed to be coming into Africa. That the goods that are needed for companies like Mr. Mukyenga's to be able to operate. Now, what kind of impact have you seen also being felt on the companies there in China?
Well, it's really a two-way problem here. So on the one hand, there is the manufacturing problem coming out of China, but the supply chain has been so disrupted coming out of Africa that there's big questions now as to whether, once China is now getting back up and running in their manufacturing, whether they'll have the necessary raw materials to produce the kinds of intermediate goods that your other guests have talked about, which are so important for African business to be able to use to grow the economy. So, for example, cement supplies are running low, chemicals, fertilizers. All of those at some point do draw on some raw materials that do come from Africa. And because the ships now are not running, because there's stay-at-homes in many countries, of obviously the mining industry in South Africa is still going, and also in parts of other southern African countries. But we really need to be concerned not just about the output from China, but also the input to produce those manufactured products.
Eric, I just want to stay with you there. Are we already seeing some form of normalcy returning to what's happening in China?
Normalcy, I think, is a generous word for it. So we got our new export data that came out, and it was a little bit better than what people expected. Analysts had expected a 9.5% drop, and the numbers actually came in at a 6.6% drop. So that was encouraging. But again, they're using some of the raw material supplies that they've had earlier in the first quarter. There have not been a lot of new raw material inputs into Chinese manufacturing for the past, say, 30 to 45 days, in part because shipping is down. Now you have the stay-at-home lockdowns in Africa. The mining systems have been disrupted. So we really have to start looking at whether or not April and May manufacturing output is going to be robust. And normalcy, I think, again, we're a long, long ways away from normalcy. People are going back to work in China, to be sure, and that is encouraging. It is not normal yet.
I want to come to you there, Alan, quickly, just to piggyback off what Eric is talking about there. There seems to be not a lot of positive or optimism coming out of that side. But now, to look at the communities that you've mentioned, like at the Busia border, when will they get back to normal lives? That 26 million that's being lost every month, that's a lot of money.
Every 2 weeks. But let me first comment on what Eric has said. Clearly, it's been a two-way traffic because we both export, but we also import. So we've seen imports go down by over 20 to 50% in some cases for some supply lines. We've seen bustling ports like Mombasa that had a lot of traffic, receiving less than 3 ships in a week or in a given period of time. We've seen the ICDs, the internal container depots in Kampala and in Embakasi, Nairobi, running at less than 20%. There's simply no cargo coming in, and the cargo going out had also stalled, but there's been improvement in that regard, and I'll talk about that later. But when you look at the border communities, there's nothing like normal happening there. The borders, if you've been there, were a bustling place of activity, and the work we've done there has helped support trade to grow. But because of the closure of all borders, you find that trade between the borders has almost all but stopped. Eggs, milk, fresh produce, everything that used to go through cereal, maize, is not moving in the way it used to move before. So it's going to take a long time. People have resorted to going back in the informal route, something which had really almost ceased because, after all, in the East African community, we have one common external tariff. So people were used to moving their goods freely across the borders with agreed procedures. We are now seeing people moving back to the informal route. So when you talk about normalcy, I don't see that happening anytime soon.
Mr. Gerald Mukyenga, quickly bringing you into the conversation. There doesn't seem to be a lot of optimism coming in from both Eric and Alan. And you, as one of the people in that supply chain who moves the goods from one place to another, you don't have any hope going by what they're saying? Or are you going to counter that and say maybe you are hopeful this will get back to normal within 2-3 months period?
Thanks to the governments of the East African region, they have more or less simultaneously taken proactive preventive measures to protect the population. The key is to harmonize the policies, the guidelines. For instance, the Uganda and Kenya have started to identify the key risk scope, especially the drivers, the cross-border drivers, because at the moment the infections in both countries are mainly imported cases that test positive. I find that there is some positivity if this harmonization of guidelines and policies and controls, especially border controls, are put in place. Right now, as we speak, since yesterday, when Uganda extended the lockdown to 21 days and Kenya is still on, they have harmoniously agreed either side to be testing the drivers and allow them to proceed, but take all their details. And when one tests positive, they would alert the other country where the driver is going. Let's say it's going to Rwanda, and the other country where the driver is coming from, let's say it's Kenya. I still see a lot of optimism in the next 3, 4, 5 months maximum if there is harmonization of policies, especially when they put on board the private sector, like they are starting to do. Trademark is one of them. PSFU, Private Sector Foundation of Uganda, and good enough, the other countries also have private sector initiatives and associations. So I feel the way it is proactively being tackled, the supply chain will be in control. Of course, it will not remain the same, but there is some optimism.
Staying with you, Mr. Gerald, how is the private sector, being that you've brought in the role of the Private Sector Federation there across the various East African community member states, how are they dealing with this at the moment? How are they reacting?
Good enough, and thanks to Trademark East Africa that he has put a lot of initiatives. Thank you, Alan and the team. We have had very organized associations like the National Logistics Platform that coordinates most of the logistics sector and the private sector and supply chain, like drivers and the rest, facilitators. So the role has been very proactive. We've been enrolled in most of the neighboring countries to advise government, to advocate, so we play the advocacy role. And most of these initiatives that you can see and you are hearing about, that I'm talking about and Alan is talking about, have been coming from the private sector, especially the National Logistics Platform, which I'm happy Trademark is a part of.
Coming to you, Eric. Now, Mr. Mukyenga has talked about how the private sector is reacting in the East African community region. But how do you think is the best way for the private sector to bounce back and handle this situation?
So it depends what part of the private sector we're talking about. Disposable income is going to be a real key question to look at in East Africa, because that's where a lot of the consumer spending is going to drive retail sales, obviously. And so the key question now is, can the consumer get back out on the street to start buying? That's going to be number one about the lockdowns. And we just don't know until we get a better sense of what direction the pandemic is going. If we start to see easing in the infection rate and people start to come out and the government start to loosen up on some of the lockdowns, then we can see a rebound. The other question we have is, when does Chinese trade start to resume? So much of consumer spending in the private sector in East Africa depends on consumer goods that come from China. We're starting to see shortages in a lot of product categories, and that's forcing up inflation. So if that's in fact the case, that inflation is rising, we do have to be worried about the pressure on the consumer and also the pressure on the business sector that depends on these imports. So shipping is going to be a key metric to look at.
Sorry to cut you short there, Eric. Now coming to you, Alan, and bringing you back into the conversation. Are there any remedial actions that you as Trademark East Africa see that things like the governments need to take to counteract some of these negative impacts on the trade? And maybe you can piggyback off what Eric was just telling us.
Yeah, thank you very much. Of course, the countries, first of all, I want to say that it's not all gloom. One, we've had the governments of the region all very vocal about keeping trade going. about trade, import and export trade moving within the region and also outside, because the lifeblood of our countries, to be honest, is on trade. We hardly produce much to sustain us. Most of what we consume has been imported. If you look at electricals, if you look at most of the consumables in the household, and even the raw materials inputs are imported. If it's just cement, clinker is imported. So the governments have been very clear. They have put in place protocols, and what we're trying to do is to see how we support the harmonization of those protocols. So that is one of the first things. But the second thing is that the informal sector has sort of been left out. So if you look at the informal cross-border traders who are moving across the border with the bags, the baskets, and everything, they have really been left out of this equation. And so we're trying to advocate for safe trade zones along the borders. Now, back to your question in terms of supply, clearly China is under pressure. The whole world is looking to buy from China. We've been trying to see, and I'll talk about the safe trade initiative we have set up later on. We've been trying to see how do we support the region. And in looking at buying from abroad, from China, which has been the traditional market, stockouts until August, everything is booked. You cannot get a single PPE or any other thing until August because they're fully booked already, either by the European markets, by the US. And so what we are looking at is working with the local industries, which has already been amazing in repurposing their factories. For instance, you have alcohol companies now producing sanitizer. You have garment factories producing producing masks. The key issue we are dealing with now with the National Bureaus of Standards, do these meet the appropriate WHO standard? Are they good enough for frontline staff? Because for us, we are most considering the frontline staff at the borders and the ports. Can we get these masks and they utilize them? So there's going to be a huge need to actually manufacture locally. And we are happy that we are seeing the private sector take that lead. We have seen KEPSA, we have seen the Kenya Association of Manufacturers, we have seen the Uganda Association of Manufacturers, companies like Crestform coming up to produce face shields. So one of the things we are now diligently working on is the standards. Are these standards enough for both the quality, the usability, the friendliness of the product that the officials who are manning, for instance, the borders and the ports can use? But clearly the private sector is going to be the driver for change, for recovery as we move forward. And Trademark is happy to share what we're planning to do in the short term and the medium term as we go along.
Alan, you talked about the keeping of borders open and this being something that East African Community member states have discussed. But recently, Burundi just closed its borders, and then you have the issues that are happening with at the Uganda and Rwanda border in the past of those being closed at a time when you need to continue or to allow the movement of goods. This in itself is a bottleneck. How are you dealing with this?
So I think one thing we need to take into account is that the East African community has been one of the best or fast-moving communities across the African continent and even globally. The milestones we have achieved have been remarkable. A common market, a customs union, a common market, slowly moving to a monetary union. But like any integration process, there have been ups and downs. I mean, in Europe, we have seen the UK exiting Brexit. In East Africa, we've been seeing challenges among some of the partner states, rightly as you say, between Uganda and Rwanda, between Burundi and Rwanda, where perhaps political and security concerns have trumped trade. And so our call to the government has been, look, your communities need to trade, and trade brings you together, and you benefit from this trade. So we've been trying to engage the government in that sense, and trying to work through the private sector as well. And the East African EABC Business Council has been very proactive, engaging with the president. And I think now the issue where the borders between Rwanda and Burundi have sort of been sorted for now. I think Burundi has set up to let goods come through. So it's a continuous journey. And we know that the presidents at the bottom of this, they know that their people have to trade. Trade is for survival, if for nothing else. We must trade to survive. And so I think they are willing to talk and engage, and we're happy to support them.
Alan is talking about willingness. Mr. Gerald Mukyenga, you run business in this East African community region. Don't these challenges, these bottlenecks, affect the running of business?
Definitely they do. These we call them non-tariff barriers, NTBs. But like Alan says, East Africa, looking at where we are coming from, harmonization has been at a sparse speed. But of course, like COVID-19 has affected every region, every country. These bottlenecks are expected, but I'm happy with the initiatives of the private sector and the associations like Trademark. And we believe and we hear the presidents are also taking it serious on the private sector. But it's true, they're affecting us. But we work around them in some way and another, and we shall overcome. We're optimistic.
Eric, just before we go into the outbreak, what are some of the opportunities? Before we get into the opportunities there, I'm getting ahead of myself. Eric, what are some of the potential solutions that the governments across the various East African countries they can take to ensure that trade continues to thrive in the region?
Well, I think one key is identifying what specific industries, and this is something South Africa has done by keeping the mining industries open, what specific industries can safely be kind of maintained and opened in order to maintain revenue coming into the country. I think that's going to be very important. So clearly mining and obviously the port areas critical to watch. These are things that people have continued to keep open. Of course, that all depends on whether or not infection rates in these industries, remain low. If infection rates go up, the government may not have any choice. And then, of course, at the end of the day, it's going to come down to debt relief to relieve some of the pressure on paying back some of the interest so that that money can then be used for domestic enhancement of the economy. So I think those are the two areas that I'm looking at right now.
Eric, there being more optimistic at this juncture. We're going to take a short ad break, and after ad break, we're going to look at potential opportunities in these pandemic times. As we've seen, history has shown us that some of the biggest industries and companies have been built during the worst of times. We still with us. We have Eric Olander, we have Asiimwe, the CTO of Trademark East Africa, and Mr. Gerald Mukyenga, the Group CEO of MULTILINES International. You're watching a CNBC Africa special. Keep it here. Welcome back to a CNBC Africa special. It's a panel of experts and we're discussing trade, but most importantly, the impact of COVID-19 on trade across the continent. Most likely now we have been very specific with East Africa, and we have a panel that has Asiimwe. She is the CTO of Trademark East Africa. She is based in Kampala, Uganda at the moment. We have also Mr. Gerald Mukyenga. He's the Group CEO of MULTILINES International, also speaking to us there from Kampala, Uganda, and Mr. Eric Olander, the managing editor of the China Africa project there. We're going to start with you, Eric, quickly. Now, we're being more optimistic before we got into the break, and I think we will be keeping the same tonation. But what are the opportunities for African countries in this crisis?
I think it's too early to tell. I've been on your show before, and I've had a difficult time being optimistic going into this. I think that this is really going to be a very dark period economically. We're going to see a major contraction in trade. The cost of borrowing for Africa is going to skyrocket now upon the debt rescheduling talks that are underway. We just don't know until a vaccine comes out to resolve this issue how long this crisis is going to go. And so without that visibility in terms of where this pandemic goes and how it affects Africa in particular, it's very, very hard to look at. In terms of opportunities of where there's opportunities to make money, this is a little bit mercenary, but this is, I think, where we are today, is the cost of borrowing for Africa is going to skyrocket in the next 6 months after the debt rescheduling occurs. So there's going to be opportunities on the yield side for investors to tap into Eurobonds and whatnot to take advantage of the higher borrowing costs. But that's terrible for Africa, but good for investors.
Bring in Mr. Gerald Mukyenga. You are the businessman here. You're the person looking for the opportunities. Do you see any opportunities in this time?
Yeah, Eric has looked at it from the macro point of view. I'm going to look at it from the micro point of view for East Africa in particular. I see opportunities for the manufacturers in the region to start manufacturing their own, for government to start listening in to the private sector. Before then, Uganda Manufacturers Association would make a booking to see the president for some incentives. These days, it's the president who makes a booking with the Uganda Manufacturers Association for some incentives. For instance, the alcohol breweries have been converted and requested by the COVID committee in Uganda to convert the raw materials and manufacture sanitizers. We have seen textile companies like Pigfair and others being requested to produce PPEs, Nile House of Plastics, and those that will be innovative and approach the policymakers. This is the time for industrialization, for the indigenous sector to start producing what we can consume and also lessen the forex that we have been exporting out there. So there are some opportunities. Number two, the online, the digitization, the automation, it has come as a demand other than any other way around. So most companies have no choice but to digitize, to go online. Blockchain and all other initiatives are going to come into play. Demand for, basically we are going to work on lean and mean, and to me that is an advantage. Space, we are going to know that now we can work from home. Why do we have to spend so much as a company, as individuals, yet we can work from home? So we're going to minimize the expenses. So every penny, every dollar, every forex in general is going to be saved. To me, that's an advantage.
Alan, as someone who's on the supply chain as well and dealing with stakeholders, you have people coming to you and looking for potential opportunities of where they can put their money. Now, where are the opportunities?
Thank you very much, Andrew. I mean, it does look quite gloomy, and coming on the back of two reports from the IMF and the World Bank predicting 25-year low recession for Africa, and the IMF yesterday coming up with a report showing that GDP of all major economies, including in Africa, Sub-Saharan Africa, is going to fall. Actually, Uganda is predicted to be the only one whose GDP only falls up to 3.5%, by South Africa minus 5.8%, Nigeria. So it seems gloomy, but as we were taught as we grow up and what we know with life, there's always a silver lining. And I think Gerald has touched on one, the whole issue of automation. We have done our part as Trademark East Africa to support partners across the region to move quickly into automation. So for instance, we are working with a tea auction in Mombasa, and this is the auction for all tea in the region. So Kenya's tea, Uganda's tea, Rwanda's specialty tea all goes through the tea auction. And after small disruption, business has resumed because the demand for tea globally is quite high. And now from April 20th, we have been supporting them to pilot online trading, put the auction onto online. So from April 20th, they are fully going online. This auction deals in over $80 million of tea traded. I think it's weekly, but I need to check the figures. But it's very high volumes for the region. So you can imagine if we can get more trade going online, what it would mean for the region. That is for our coffee trade, for our maize. This challenge of COVID also gives us an opportunity to look at a more structured way of doing business. For a long time, we've had the food corridors really run by, I wouldn't want to say cartels, but strong businesses that have had a stronghold, and you found that informal business hasn't benefited as much. And so we are together with partners, like you said, how to actually support structured agriculture trade for key value chains. I talked about fish already. I mean, there's cereal, there are legumes, pulses, beans, anything that we are feeding in, millet that the community is feeding in. So I think this COVID, much as it has disrupted supply chains, gives us an opportunity to come up with more structured, to support the region, come up with more structured and transparent systems. And IT and technology are going to be center to this. So e-commerce is a big player for the region. And we have been talking about Africa leapfrog to the fourth industrial revolution. There's no way but to leapfrog through this e-commerce. I have a sister who's been trading on groceries. She's gone online and is now supplying door to door. And for me, that has been what we are seeing with small business across the region. To survive, they have all had to try and see how they go online. Yeah, so that's just one opportunity. There are several I could share in the region.
Well, looks like automation there bringing itself to the doorsteps. But Alan, I just want to stay with you and you talking about automation and the fourth industrial revolution and being able to leapfrog. Now, for these things to be able to happen, there needs to be some sort of infrastructure. And we've seen East African community countries lag behind, most of them, in terms of setting up the infrastructure needed for this. Now, minus the infrastructure, capital is also needed by the businessmen to be able to automate. Now, if they automate, there will also be loss of jobs with so many unskilled people that can't work in these industries anymore, that will need some form of reskilling. That in itself is a danger. Now, how do you tackle all these issues?
Thank you. I think we have some basic infrastructure in place. So the fiber has been laid in many of the places. So there's some basic infrastructure that can support some level of automation. And I think it's something we can't run away from. For instance, one of the things we've been working on with the flower industry in Kenya is trade logistics platform, information platform that enables a trader to sell their flowers from their farm. And the information is already in Rotterdam, which is the main receiving point in Europe for these flowers. And this blockchain technology was going to remove all the paperwork, all the delays that could particularly be bad for a sensitive sector like flowers, because they must get there on time, they must be auctioned on time, they must be delivered on time. Every day adds data to how they appear in bloom or wilting. And so we've been piloting a number of technologies. We've worked with a number of organizations to put in place systems, single windows. So for instance, if you look at the revenue authorities, we've worked with them to put in place systems to actually track cargo along the corridors. So the systems are, the backbone is there, the basics are there. I think we can build onto them and build onto them in a way that is sustainable, that ensures that job losses are minimized as much as possible. But I think we cannot run away from it. And I mean, looking at social distancing, we have scientists from Harvard predicting that we're going to have to social distance until 2022 unless, and like Eric says, we get a vaccine soon. We are going to have to look for new ways of doing business. And this is the unfortunate reality for our region.
Eric, Alan wanted you to bring in the conversation, so I'll definitely do that. Alan talked about the World Bank and IMF loan credit facilities that have been that they have announced recently. Some East African community countries have qualified for these, the likes of Rwanda and Uganda. Kenya doesn't qualify because it's a middle-income country. But Eric, won't this put African countries in another debt trap?
I think debt trap is a very difficult language to use. So the special drawing reserves, the special drawing rights are going to be a key issue that we're talking about now in the IMF and the World Bank, and whether or not they're going to increase that, particularly for the highly indebted countries. So they might get those extra special drawing rights from the IMF. The key question is going to be on what are the Chinese going to do on debt relief? It looks like from today, based on what Reuters is reporting, that they are going to be working with multilateral lenders, the G20, the Paris Club, that's our first indication, to do some form of debt relief. We're looking at two phases of debt relief right now. A short-term fix just to kind of get out of this current predicament, to relieve some of East African government spending right now. Right now, I think it's somewhere around $675 million that Kenya, for example, would be paying back to debt on interest. And so by being able to allocate that money now for public health and for economic revitalization would be very, very useful. The second phase is going to be leading up into the Forum on China-Africa Cooperation Summit next year that's supposed to happen in Dakar. And the speculation now is that we're going to see a deeper structural debt relief program that may come into it at that point as well. So there's going to be debt relief in different phases for different countries. And again, we're dealing with bilateral, multilateral, and the private sector and private market, capital market debt. So it's not going to be an easy fix. This is very different than in previous economic crises in Africa, where it really was the Paris Club who could kind of make the magic case.
Eric, one of the other things which was talked about is regarding automation and also changing the way things have been working at the moment. Now, if it's changing the way things have been working at the moment, Africa has to look different. Africa definitely has to start trading differently with the world and with China in particular. Do you see Africa changing the way it deals with the world in terms of trade after this?
You want it to. You really want to use this crisis. Don't let a good crisis go to waste is an old saying, and you really hope that it will. But the problem that we see right now is that this infrastructure question just isn't in place right now to really affect big change. And what I mean by infrastructure, I'm talking mostly about power generation. So in order to generate the types of jobs that we need either to power the fourth industrial revolution or to power, standard low-tech industrialization, you need energy. And energy is a key problem. And number two is logistics. So getting goods across borders, and that border transfer of products and goods throughout East Africa isn't just the physical infrastructure. People like John Magufuli, the president of Tanzania, want to build a vast standard gauge railway network emanating out of Tanzania. That's super important. But we need cross-border tariff reduction. We need harmonization of policies. And there's a lot of public policy work that also has to go in. I'm really hoping that African leaders will sit down and take the next step in the common market idea and to harmonize a lot of the tariffs and the taxation and the rules and regulations that hinder trade today.
Mr. Gerald Mukyenga, I want to bring you into the conversation again. Stimulus packages are very important, and we've seen some countries being able to come up with some form of COVID-19 relief funds. But what kind of stimulus package, as a person in business, are you looking for from the government at this time to keep businesses afloat, to keep people employed?
Basically, with the private sector, I'm not looking at handouts. We just need the trade facilitation initiatives. We are looking at things like the central bank, that stroke government, negotiating with the commercial banks to defer the loan repayments. We all know that in many countries, including Uganda, the loan becomes bad after 3 months, after 90 days consecutively not paying. The effects of Corona are going to be felt even after post-Corona. So basically during the supply chain, somebody has not been trading, there's a lockdown. So even if the 21 days, for instance, in Uganda, end on 5th May, the sales may not necessarily increase on the many non-essential, not even the essential items, but until about 3-4 months, especially when the replenishment comes. So somebody who got a commercial loan, a business loan from a bank, may not be able to keep their word with the bank. But also negotiating on their own is not enough. The same way the landlords, they need to be talked to, but this again goes back to the government, the central bank. Then there are some grants that can be extended in form of economic recovery. Government is doing very well in controlling the infections. That is keeping the market for us, the private sector, in putting programs that can run and safeguard the less vulnerable. Like now they are giving food aid and so on. And now I'm talking in particular context to Uganda. But the economic support needs to be thought about, and we quite have so many initiatives that we have, but most of them are rotating around negotiations with commercial bank, not run after the people they lent money and the organization they lent money, to defer. They don't need to pay for us, they just need to defer for some months.
Mr. Mukyenga, I'll stay with you there. You mentioned the issue of loans. We've had countries like Ethiopia bringing, one of the measures that they've put in place is no repayment of any form of loans for the next 3 months, which looks like a step in the right direction for the business people. But countries like Uganda, Kenya, Rwanda have had the lowering of their repo rates. In Uganda, to be more specific, the central bank came out and lowered the repo rate by about 1 percentage point. So that means the commercial banks can lend at a lower rate, but just 1 percentage point. Do you think that's enough? Do you think the government is doing enough to ensure that you stay liquid and you stay afloat?
I believe it's not enough. It still needs to listen to us, and we propose more initiatives, especially those who will take advantage of the crisis. Like Eric mentioned, this pandemic should not be taken out for waste. And like I mentioned, this is the time for the indigenous manufacturers, those that can produce the item that the people can consume, need money. There will even be new entrants in the market, and they will need loans. And these loans, with a reduction of 1%, will not stimulate the economy.
Alan, Mr. Gerald Mukyenga talked about grants as a form of stimulus package there to keep them staying afloat. We mentioned also the measures that are being taken in Ethiopia, Kenya, Uganda, Rwanda regarding the central banks there. What other measures do you think should be taken to ensure that even people in the informal sector are supported at this time?
Yeah, so thank you. Gerald does raise very important points, because our private sector and our small business has really been resilient. And really our economy is built upon the backs of these people. I know very much, because my mother was a trader for most of my life, and she paid our school fees and all through the cross-border trade she did between Uganda and Kenya. So small business is always resilient. They bounce back, but honestly, this time they do need the support. So the loans are good, the rebasing is good, but I think they need to have a hand, a financial hand, because we know one of the opportunities we have not really talked about is the continental free trade area. All the governments I've had speak in the region are talking about value chains, and finally, this is an opportunity for us to industrialize. Now, for you to industrialize, we need to have business, small business, both the demand and the supply, but we need to have small business able to produce, able to get the input, and they need to have the facilities in place. So I would really urge our government to come up quickly with quick facilities. I will talk about some of the work we're doing with as Trademark. We've already talked to people like FSD Africa and FSD Kenya, Financial Services Deepening, which is one of the DFID-funded programs, to see how we can get grants to our informal cross-border traders and the women traders we've been working with at the borders, because they have lost all their business. They would trade in goods and get daily income. Their savings are being wiped out because they can't work. And so we are saying if they are to recapitalize, they are going to need some form of financial support. So I would really urge the government to do. We've seen this happening in Europe. We have seen it in the United States. Now, we may not have the same resources, but I think we can call upon big business and even partners. I've seen in Bangladesh, for instance, one of my friends who is working in the clothing industry. We've seen big companies in the UK, in Europe, like Prime, which do a lot of work with factories in Bangladesh, actually coming out to support and put in place funds to support maintaining workers in jobs and that kind of thing. So we need to be innovative, but we cannot let private sector and small business especially just go along thinking they are resilient. They do the hand right now to survive.
Eric, and just before we let you go, and what form of stimulus package do you think is needed at this moment to help African economies be able to bounce back? What is that the Democratic Republic of Congo is going to grow at negative 5.5%, according to IMF?
I think the key thing, particularly in most emerging markets, and especially in Eastern Africa or the Democratic Republic of Congo, is finding ways to get money into pockets, in part because business activity has slowed, retail activity has slowed. So by finding ways to actually put money in people's pockets, I know it sounds simple, but it's actually very, very difficult. But getting that consumer sector going again. But all of this is really, again, going to depend on whether or not the health of these societies stands up, and if this pandemic goes forward, or if it kind of just fades out, which is a possibility. We just don't know which way it'll go. But if the public sector can do more to get money into people's pockets, again, debt relief is going to be a key factor in that. China, of course, playing a very important role. And by freeing up those monies, it is really going to be something critical to be able to offer subsidies, grants, different ways of kind of priming the pump, if you will.
Eric, any parting shots?
So, I'm sorry, say again?
Any parting shots?
You know, I think this is one of these things. The silver lining of this is that the crisis is happening, and it's happening everywhere. And so debt relief, last year when we were talking about highly political states in China for Africa, where the U.S. was saying they weren't going to support African debt relief because it would create a moral hazard from borrowing from China. That is all off the table now. African governments, at least again, a small silver lining, everybody is in agreement that Africa needs debt relief. It's happening fast, and I think it's going to make a very, very big difference both for the consumer and the business economy in East Africa.
Thank you very much there, Eric. Alan, well, what's the silver lining in all this?
Thank you so much. I think for me, the opportunity for us to make a difference, and as Trademark, one of the quick things we've been working very hard to do is to put together a safe trade facility of $20. We have gotten a number of development partners behind us, DFID, the US, the Dutch, the EU, a number of donors, Danida, and we are trying to say we need to support the region to recover from this. So the $20 million is going to help us work within the Eastern African region, to support safe trade along the key corridors, to ensure that the border officials are well protected to be able to let trade happen. The protocols are in place, the harmonization in place, but we're also looking at more medium-term support around e-commerce, supporting a lot of e-commerce initiatives, supporting the informal cross-border traders, and especially the women in trade who are thriving and are now seeing this huge setback. We're also looking at supporting exports. So my team has been working with the airline industry to see how we can support export of our foodstuffs. Actually, our vegetables and food are on high demand in Europe, in Asia, in South Africa, but the cost of airline industry is so high. So we are trying to see how we can support and work with the industry to make the cost of exporting 1 kilogram down from $6 to $3 and even lower, if only we can code share. So there's so much we are doing, but with that $20 million, we'll be sharing more. And for more information, you can go to our website to see what we are planning to do around the region in this emergency situation. We are standing with the government and we are standing with the business.
Thank you very much, Alan. And Mr. Gerald Mukyenga, what is the silver lining at the end of the day for people in the private sector like yourself?
I'm going to cut it short. First of all, we want to encourage our leaders in the region that this East African Common Market, East African integration is at its worst challenge and a test. All the governments must try to find a way of working together and not start duplicating things that they are not necessarily at their best competitive advantage of. If they can do that, I think we are going to save a lot of forex. If Uganda or Kenya is best at producing PPEs, and another one is best at producing food, and another one is best at the other, we should start checking ourselves. And I want to encourage the leaders, first of all, to also embrace the communication and don't wait for these other protocols and summit and so on, because this COVID might take longer. Secondly, I want to encourage the private sector, the individuals, the governments, that survival tactics are the best way to go now. Everyone must find ways and means of looking for ways of survival in this pandemic, so that post-COVID can find us ready with the new initiatives. And lastly, everyone, wherever we are, we, like Eric mentioned, the ordinary man, we must find a way of putting, as government and those stakeholders like Trademark East Africa, initiatives that can put money in people's pockets so that there is sustainable demand within the region, and the demand that will sustain all the supply chain services and products that we produce. Last but not least, let us keep safe. Thank you.
Thank you very much, Mr. Gerald Mukyenga, for being with us. Mr. Gerald Mukyenga is the Group CEO of MULTILINES International. Eric Olander also speaking to us. He's the Managing Editor of the China Africa Project. And Asiimwe, she is the CTO of Trademark East Africa. You have been watching a CNBC special panel on the impact of COVID-19 on trade in East Africa and Africa as a continent. See you next time.